Good morning, everyone. Welcome to our live trading room at Admiral Markets. We're going to take a look at the Forex market, the euro dollar, pound dollar, you name it, as always. But before we do that, the risk disclaimer, explaining that trading is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So, as always, thank you for your attention on that one. And welcome once again, Admiral Markets. My name is Chris, and we're going to take a look at trend trading. That's the topic of today, and we'll be talking about trend definition. And by the way, we have also an educational webinar regarding trend definition on Thursday, right, at 5 p.m. or 6 p.m. Central European time. Tomorrow we'll be looking at reversal trades, by the way. As always, actually, we're looking at establishing the trend bias, so I think it's good we look at that. And then we always try to find an opportunity, check our filters, decide or determine what the trigger is, and then look at the entry methodology we are approaching this currency. All right? So specific strategies that you can fill in with these 5 steps are, for example, breakout strategies, pullback strategies, etc. Make sure to take a look at Admiral Markets on social media. And last but not least, I am going to introduce Michal. Good morning. And then we'll take a look at the Forex market.
Good morning, everybody. Good morning, Chris. It's very nice to see everybody here again. I think we see a lot of new faces this webinar, which is very lovely. It's lovely that people spend their time trying to educate themselves. I think it's fantastic, and you're going to have a great webinar just 3-4 minutes later. But before that, my name is Michael Onohov, and I'm a client relationship manager for Admiral Markets. Here you can see my email address, my Skype, my LinkedIn, and also the email for Trading Camp. If you want to reach me at Trading Camp, you can always do so at camp@admiralmarkets.com. I wanted to speak to you all because all of you came to this webinar for one reason and one reason only. You are interested in trading. You want this process to be successful, and you're interested in trading to become a Forex trader. Some of you just interested. Some of you have experience with Forex. When you have looking like that, of course, trades. When you are a bit happier, obviously all of us want to run the guy before. Both of them are quite similar. They have a good suit on, fancy watch, but only the second guy looks genuinely happy. He has closed a great trade and he's tasting victory. And I bet it tastes good. I bet all of you want to taste victory in Forex as well, every minute, every hour, and every day. This is why you're here today, to get better, to get ahead, to be just like this guy. But what do you do to get there? Forex is definitely not a walk in the park. To be successful in Forex trading, you must be able to swim with the sharks. And swimming with the sharks is one hell of a job that requires courage, strength, and of course, plenty of practice. So how do you practice for a job like this without getting eaten? How would you practice swimming with the sharks with no risk? Well, in real world, it looks like this. You put yourself in a position where you can get a first-hand experience with no risk. Here you see a cage protecting divers against a shark. This kind of experience in the Forex market, it has a name also. You can get a cage like this, and it's called Admiral Markets demo account. Trading Forex requires a lot of practice. Just look at this Forex setup. It's very difficult. You must be familiar with the market. You must be familiar with the platform. And in Admiral Markets, you'll get a chance to get yourself familiar with MetaTrader, which is the most popular trading software in the world. And it is the most popular for a reason. It is the best. It offers tons of features for those Forex rookies and professionals. And it will be your wings. It will be your path to victory. I mention wings for a reason because, in my opinion, being a Forex trader is very similar to being a pilot. Just look at this setup right here and look at the pilot's cockpit. You see a lot of indicators, lots of different charts. You have to read a lot of meters, and you also share a lot of features that you must acquire. Being a pilot and being a Forex trader, you must be able to make decisions fast, and your decisions must be correct. And the pilot is responsible for the passengers. You'll be responsible for your money. You're going to be a pilot of your own Forex career. But before a pilot is allowed to fly, he spends hours training on a flight simulator. It looks just like this. Pilots get familiar with all the features of the aircraft. They put themselves through a variety of different scenarios. So when they pilot a plane, they can make an instant split-second decision. A simulator just like this one does cost a lot of money. So it's very nice that Admiral Markets gives you your own Forex simulator absolutely free. It takes less than a minute to register an Admiral demo. You get to test yourself in real market conditions for free, for as long as you want, with absolutely no risk. You will learn new things today, and once this webinar is finished, register a demo account and put all the ideas into practice. You can trade currency pairs. You can trade CFDs on commodities and equities. And our spread is in fact so small that if we forgot to mention it, you probably wouldn't know it was there. It's 1 pip on all major pairs. Seriously, 1 pip. Admiral Demo will give you a chance to see for yourself. So you can go to admiralmarkets.com once the webinar is finished and get yourself a demo account. If you want to be a trader, train hard to become one. If you have any questions, you can always reach me on this email, Skype, or LinkedIn. And also, if you want to get some practice in using a demo account, you can always get yourself enrolled into a camp at admiralmarkets.com. All you have to do to sign up for the 3-week course, where you will receive everyday assignments, strategies by professional traders, performance tracking, personal coaching, and literature, all you have to do to get this great package is to write a short essay on what you're planning to achieve with Forex in a year, and also open a real account with $10 in it. That's all it takes to start learning Forex one day at a time. Thank you very much for listening. I'll now pass the microphone back to Chris. Thank you very much. Have a nice day.
Thank you so much, Michal. Always great to hear from Michal. And make sure to join that trading camp. Well worth your energy because it's very supportive in your trading. You will learn a lot. So definitely do that. We're going to take a look at the Forex calendar to get an expectation what we have for news events. As technical traders, I'm not looking to trade the news, by the way, but I just want to see how they can affect the market. And we have pound, claimant, count change in 1 hour, 38 minutes. Other than that, some pound and euro news, generally lighter and medium as usual. And in the New York session, in fact, just very light USD news. That's about it. Let's continue to our charts and take a look at the euro dollar here. And the euro, in fact, had a very nice fall yesterday. We were talking about the downside potential below this green trend line, and it fell nicely. The break, indeed, going all the way to the bottom as we were talking about yesterday, right? This is a well-defined structure, and someone was asking, Kaylin was asking about a buy here. Luckily, Kaylin didn't do that because you can see once this trend line breaks, it fell all the way even below this support a bit, right? But not too much. So with that downside pressure, I do expect at least one more continuation, in fact, to lower grounds. Then we'll see after that what happens. In any case, I think one more downside continuation here, maybe to 134.50, 60 level, is a high probability setup in my opinion. So with 6 minutes to go, I think the best is probably to take a look at this hourly candle and see how that closes. But I am planning, in fact, to take a short very soon for that downside. We've had a pretty deeper correction, deeper correction than one would expect, all the way to the 618 fib, in fact. But that I would expect would be the turning spot. Usually speaking, if this is at least a 5-wave down, which I do expect. So I don't think it makes sense to take it right now. I might as well wait 6 minutes to let the hourly finish. But we could think, or I'm thinking about, for example, letting this hourly candle finish and either taking it upon the open of the candle or waiting maybe for a small push-up to retrace that wick. But because the hourly candle is so small, I don't know if that makes sense. It's just those few pitch difference really don't matter that much, I would say. Now the stop loss is, of course, some is a different chapter again. We'll talk about that in a second. First of all, let's take a look at for those of you who are maybe joining us for the first time or haven't joined yesterday, let's take a look at the euro maybe from a bit bigger perspective to go through the reason why a sell might make sense right in here. One second. Alrighty. So what do we got here? A lot of lines, but basically, let me go to the day chart otherwise. Basically, we, on the daily chart, are still in an uptrend, although we have recently made lower highs, right? Basically, because our topic of today, our theme of today's session is trend trading, right? So we'll be doing a lot of trend definition in real life. And trend definition is, in theory, very simple, right? We're always looking for lower lows and lower highs for a downtrend and higher highs and higher lows for an uptrend. That seems all dandy and sweet, but in real life, there is some complications because of multiple time frames, but also because of the fact that the currency is just not always as neat as one would like it to be. Sometimes it is, sometimes it isn't. So in theory, it's always very black and white. It's always very simple. In real life, sometimes it's simple, sometimes it can be takes a bit of time to distinguish what is the trend, right? In this case, we have lower highs, but we don't have higher lows yet. Well, we do actually. Yeah, we have a higher low here. We don't have lower lows, sorry. So if anything, it's kind of a wedge still on the daily chart, although we can see clearly this up momentum before that, right? With that said, though, we should be aware of this resistance line. I don't know why it's green. Let me make that red. It's a mistake. Red is supposed to be resistance, right? That is a clear resistance, though. So you can see, although the currency was in an uptrend, we slammed into the bigger resistance at 137 and so far are not able to break through it, which is logical because almost any currency and any time frame is going to have difficulties with pushing through a support and resistance, right? We're always bouncing from one support to another resistance and then back down to support until at one moment we do break out. Alrighty. The 4-hour chart. Well, the 4-hour chart is showing a bit different picture already, right? We can see that downside momentum into play a bit more. And for those of you who like any of the waves, I have a wave analysis at Admiral Markets, and this is either a 1-2, 1-2, or this is kind of like corrections to the downside, right? And then maybe we see a bounce somewhere around 134.60. which is still the daily bottom. That's why I have a green line there. In fact, this one I can take away. It should be red. Anyhow, it's still a key level 134.60 because it's a daily bottom, right? Right there. So let's go down to the 4-hour chart. That's why there's a green line. That's why if we are shorting, then that will be the target. So the daily chart is a triangle after an up move. The 4-hour chart is a downside, right? So, is a short with the trend? Well, it's not a clear-cut 100% downtrend, right? It is a bit of a mixture, but it's good enough for me. If there is a triangle, for example, on the daily chart, and a downtrend on the 4-hour chart, then that's acceptable. I mean, if you have both time frames really diverging from each other, you might want to be maybe more careful. Set that one out, depending on how you judge it. You can even take a look at the hourly and weekly to make your decision in that case, maybe. But if you have a triangle or if both are pointing to the same direction, of course, that's even better, right? then you have clearly you clearly have a trend in that case. But this is good enough for me, usually. And if we done anything else on the 4-hour chart to mention? Well, we had divergence between the 4-hour tops, but we already reached the long-term moving average. That is the goal of the divergence. We do have daily divergence, right, between the tops. Something to note. The 1-hour chart is moving down, but quite not as fast as one might expect. But yes, we do have 5 waves down here, a choppy correction here, continuation, correction, and what looks like a continuation right there, right? So that's what I'm looking at right now. And if you then look at that, we had a great break yesterday, nice fall, retraced some of it, and I would say the chances of making one more downside are decent, especially if you look at the 50-minute chart. That was a huge momentum pushing it down. So personally, I will put a stop loss probably above this top. I think that's fine. So I mean, if it goes above that top, well, then probably it's doing something else than I expect anyhow. So I sold at 135.18. I put the stop loss at 135.38. And the take profit I will put at 134.62. Ah, 64. What are 2 pips among friends, right? So that is a market order. It's a sell on the euro dollar. Let me type that maybe for those of you who are interested. Now that's just my trade. The decision is always yours, of course. Now I'm punching those numbers through a chat. Does anyone see that chat? I don't know. I just typed it to entire audience, but I don't know. You do see it? Okay, cool. I don't know how you see it, but Graham, you don't see that? Okay, cool. The others do see that, Graham, so I'm not sure why you don't. The chart is right here. Let's see. Yeah, there's no lines there, in fact. That's strange. The trade is open. That's weird. Maybe it's the settings. That totally beats me. But does everyone, I mean, I'm not trying to trick you here. The trade is open. You see that, right? But it's just not, there's no lines here. It's weird. I don't know why. I thought maybe the properties, but it's the ask line, stop levels do have a color. No idea. Really no idea. Graham can't see it. So let me just, if you don't mind, give me a minute. I'll just type it for Graham, the numbers. If it is always easier if you see it visually. So just give me a sec, okay? Long, wait, short. All right. So let's see. The reward is 36%, 1854, so it's like a bit more, 2.6 to 1, R2R. To be honest, I was even contemplating putting the stop loss right above here at 25, 27, 27, let's say. But I don't know. It is a resistance, of course, on the 50-minute world, clearly. Then again, I was thinking, if you look at it this way, could be even maybe a small ascending wedge. If it pops up like that, it could still use this as a resistance and then move down. So that's why I ultimately then decided right now here to put it there. That's why. It's rather a bit further away, maybe 20 pips is still decent stop loss, isn't it, anyhow? So that's the idea. Now you know why. Let's see how it goes. Fingers crossed, as always. And say, motivate the good luck charm to do a good job today. I'm just kidding, folks. Well, that's the euro. Any questions regarding the euro before we can maybe move on? This could even be a trend line, in fact, isn't it? Maybe worth scaling even if it breaks and hooks back. Let's see. So, scale in. One scale in if it's a really nice situation and you feel confident in the analysis. An extra scale in sometimes is great because, especially if the first trade, of course, is already riskless. Let's face it. Or if you've planned on the scale in and your total risk is still within your risk management. Those things, of course, help. But otherwise, a small scale in sometimes is nice to add to the equity when you're right? It's always about how much do you win when you're right and how much do you lose when you lose. That's it. That's the game. Well, I don't see any questions, so I guess we can move on. We'll go back to the euro, though, right? The pound is moving up. That's funny. So that's the euro pound moving. Pound is kind of wacky. I wouldn't trade the pound today just because of the fact that this is a very spiky up and down consolidation correction type of pattern. Yes, and I mean, if you look at the 4-hour chart, oh, let me get rid of some fibs here. That's way too much. It's too crowded to see anything. Here, let's clear it up a bit. All right. Oh. So, what you basically could look at here on the 4-hour chart is a potential up move, in fact, because we had a clear 5 waves down. Now, you don't have to be an Elliott wave expert to know that there are 5 waves in a trend and 3 waves correction in a correction. If you just know that already will help in some cases, right? Because sometimes it's just very clear like this. You don't have to be an expert Elliott waver to see that. So there's always the chance of doing this. Now, with that in mind, if we break above that orange line, we could make that upside and then maybe find resistance around maybe this top in here. We have a broken uptrend line that could act as resistance somewhere around 161, for example, right? Those are clear resistance lines. But let us start first. I'm going too fast, in fact. Let us first start with the day chart and define the trend. The trend here was up, obviously. Look at the purple, pink colored uptrend channel. Clear uptrend, right? However, recently we've made a pretty deep retracement, deeper than probably this one, right? Right in here. And we've actually broken the daily low, which means we have a lower low, we have a lower high. A lower high is already. And we've broken out of that uptrend channel. So what we can carefully say is that we're at the beginning of a downtrend on the pound dollar and daily. I wouldn't call it a full-fledged downtrend as yet because it just started. We don't have a real serious channel like this. Plus, we're still above the intermediate moving average, which is important. Right? I'll explain in bigger detail exactly how that is important, this moving average, on Thursday. So maybe we're in a neutral zone on the daily. Let me say it this way: we're showing first signs of like a downtrend, but we don't have a serious lower high yet. A serious one in the sense that this is just still one move down on the day chart. You still need kind of like a hook back here to get a trend channel angle before you can expect that downside. That's what I mean. So we are exposed, this currency is exposed to get that retracement up, to get that angle like this for that downtrend continuation. Does that make sense? Technically, we are making lower lows or highs on the day chart. But because the intermediate moving average and the fact that the downside hasn't been corrected yet, we could be exposed to a correction like that for more downside, we could expect that correction before continuing down. Does that make sense? Do you want to check? It's something similar to this, for example. Right? We have a very strong upside. This is technically an uptrend, right? Yet we still make a deeper correction to give kind of an angle of that trend channel. If we are in a trend. Now, that doesn't necessarily have to be a trend because we can be in some kind of wacky correction and then you won't have that, of course. That's something we still have to see. Look at this downside. It still got corrected before you continued, right? Does that make sense? Maybe some people are still fuzzy about it. I don't get any confirmation as yet. Here, look at this. Upside, uptrend, right? Higher highs, higher lows. That is the definition of uptrend, right? But that's why you want a trend channel and to still use moving averages for trend definition, because even though there's higher highs, higher lows, you still get a hook back to test this bottom, and then it really lifts off more, right? There is an example here where it just flew down. No hook back, just an ongoing continuation. Right? So it's not always the case. In that case, when that happens, let's zoom in a bit to that example. You want to definitely keep an eye on the bottom. When the price does reach the intermediate moving average, you want to keep an eye on these daily lows, because if it breaks below, well, then probably we're just so impulsive that we're continuing. You see that? All right, so now I'm asking you, does that make sense? Are there any questions? Does anyone hear me, first of all? Otherwise, I might be talking into outer space. Okay, great. Thank you, Anna. Okay, I got only one person who said yes. A second. That's good. Okay. 3 people said yes. Okay, good. If it doesn't, no problem, but let me know. Because often enough, this concept of when to expect, even though it's a trend, when to expect still kind of a retracement, even though we're in a downtrend, is sometimes often enough fuzzy for traders I talk to. And this concept particularly sometimes raises questions. So that's why I wanted to check. But I'm glad that everyone is following. That's great. Pound dollar is very choppy, and 159.15 is definitely support. It's acting as support double bottom, more or less. And we can see that potential. I did mention it in the wave analysis already yesterday, of that upside to correct this downside. And even though that was yesterday, let's see, 15th. Yeah, around here I said it has the potential to go up. Well, it didn't make first the downside, but it didn't go far, right? So it's still in that correction. So that looks like it's really playing out. What would be a logical fib? I think 618 looks very sweet. That is also this top. If it gets that high, well, that would be an interesting trade. Even the upside could be interesting, but there is some resistance, right around here, 160, in fact, 160, 160.20 zone. But if it does break that, we could see some upside, but be careful of these fibs. That's the problem when you're trading this reversal. You got a 382 here. It's going to pause there, move up, pause at the 50, move up, and then maybe reverse at the 618 for more downside. One more downside, maybe down to 157, for example, where it could bounce up again. It's always this game, right, between support and resistance. So something like this, and this is how you can easily build maybe not easily, but you can build a path of least resistance, right? The currency will go up to the 382, respect it, up to the 50, respect it, then maybe do something like this, down to the 618, and then go up again, etc. So for me, the most interesting trade here, as you can imagine, where's the sweetest spot? If you look at this setup, if I have this expectation, you already know what I preferably would like to trade is the sell at 618, because that has the most space, really, right? If you're looking at wide open spaces to trade, as maybe, it doesn't really matter what type of trade you are, then that would be the best one. But the currency could also turn at the 50, right? For example, or even to 786. So that's something we have to be aware of as well, and be ready to be flexible and be ready to adjust if we get signals that another fib might be used. But the CX618 is always, of course, a big fib. It's a very common one. It's the fee ratio. So let's see. That's for the moment the primary plan. A sell stop below this level. Yeah, that makes sense in a way. To me, I wouldn't be thinking about it yet. But if we do turn here, which is always still possible, we haven't broken this level yet. It could make sense, yes, but it's not something I would be looking for myself, because I'm kind of more monitoring it a bit on the lower time frame. So I'd rather wait and see and decide my entry at a more precise point in time. But if you are limited in your ability to follow the market, and you can, let's say you only look at it maybe once a day, then you can't take a market order maybe or place that precise entry order along the way during the day. And then ideas like that make sense, because then you want to have an order ready so that if the market breaks, you can catch that trade. And then the stop loss, an entry there with the stop loss above the high and a take profit at the minus 618 would make sense indeed. But at the moment, I think I would be careful with that. I wouldn't do it for the moment, because I think we're still exposed to that upside retracement. So let's go to the 1 hour chart. And we can even put a fib on this up move here. And you can see that the 618 is lining up a bit with the 382 here. The difference is only 8 pips. So that could be a confluence. The 1,000 is lining up with the 50, etc. So let's see how this, let me adjust this trend line a bit. Maybe just do like this. Or maybe even the best trend line is doing something like this. Just taking the recent tops. We're breaking through that, in fact. It's not something I want to trade, but let's see how far it goes. It has everything to do with the fact that the euro pound, of course, is moving a bit down as well, although the euro pound is now moving up a bit. Personally, I'm still waiting for a 50 fib if you use this swing high, swing low still. Otherwise, if you move up the fib, it's a 618 fib. And we were saying yesterday, right, that this is looking like it will break here because we have divergence between these tops, and that channel looks like it will break for correction of these 5 waves to the upside. So I still have that entry order there. Right? So the euro dollar doesn't look too good. It indeed pushed through this top, as I was thinking that it could happen. I wasn't hoping that, but it did seem like this. Let's see. The funny thing is that if you look at the hourly candle, it's a pretty nice bearish candle there, in fact. So kind of funny. Well, let's see. If it does push above 135.48, then then the analysis is different. Then it's definitely not a 5 wave, but this is just a correction, in fact. And if that's a correction, well, then this is most likely just an entire correction, and that could be bigger upside. Yeah, that's true, Adrian. Adrian has a good point. Personally, that wasn't the main reason anyhow I shorted it, by the way. The short has the main reason. Adrian said that it doesn't have a good run up, so it's not really like a good pin bar, which is definitely true. Pin bars are really, first of all, only the best reliable 4-hour and day chart, first of all. And it really makes only sense on the 1-hour chart if you are at a major resistance level. And you would basically even take an entry right at that fib. Then that's the only reason that they make sense, in fact. For me, it was just funny, just as extra comment, that's all. For me, the main analysis is this strong momentum here, the break, and usually if you break, you get a continuation and a 5-wave sequence, even if this is only a correction like this, like that. Let's see. The good thing is that the stop loss is above a 4-hour fractal, right? So even if this goes up to retest this 4-hour resistance, there is a good chance that the market and price will respect that level because it's a 4-hour resistance. And we know that the market doesn't like to break any particular resistance support in one shot. So if it does move up, there's a high likelihood it will at least respect it. Then we'll have to see. Fractals are just easy methods of identifying tops and bottoms, basically, or resistance and support levels, right? What it is just 2 candles to the left and 2 candles to the right. No, wait, the middle candle is the lowest or highest of the 2 candles to the left and 2 candles to the right. So if you take this one, for example, right in here, that candle high is higher than the 2 candles to the left and 2 candles to the right at minimum. There could be a lot more. In this case, there are a lot more candles that are lower, but the minimum is 2 on both sides. Once it has 2 on both sides, you will get a fractal there. If it only has 1, you won't see a fractal. So it's just more like a visual tool there. So let's go on with this trend definition. Odd USD. Everyone likes the odd, so I think it makes sense. This is the daily chart, odd USD. There are 2 fibs on that, 1 red, 1 green line, 2 orange trend lines. What do you think is the trend on the odd dollar right now, right here on this daily chart? Up? Is it up, down, or do you think it's a range? Is there no trend? That's also, of course, the alternative. One of the options as well. Anyone else still want to vote? I like these elections. By the way, just in general, right? I'm sure you know, but we have those budget talks in the U.S. and the deadline is tomorrow. So I don't know how that will affect the market, but so let me sum it up. We got 1, 2, 3. 1, 2, 3, 4 ups, 2 ranges, 1 forming to go up probably. So I'll count that as a half up. 1, 2, 3, 4, 4.5 up, 2 ranges, 3 ranges. Sorry. So 4.5 to 3, the uptrend wins. Okay, Modris is adding some a comment here saying up move is not fast enough. That's always good to look at, indeed, time factor, definitely. But probably in the trend definition, I don't think it's necessary have to have that, but it's that in general analysis, I think it's great indeed. Giannini thinks it will be an uptrend. That sounds like half a point there. No, Giannini already counted, already voted. So yeah, that's four. So the uptrend one, clear winner here. Well, not a clear maybe, but 4.5 to 3. No one voted for the downtrend, which makes a lot of sense because price is above or fighting to push through that red line, which is resistance. So everyone saw that good. In my opinion, it is an uptrend. Yeah, I would agree with the uptrend voters, and that has everything to do. I'll tell you why. In my opinion, that is so. That has everything to do with the fact that we have higher lows, higher highs here. Plus, we have a clear hook back here, and we have a bounce here. And recently, we've had higher highs, higher lows as well. Plus, we're pushing above this top. I don't think you can go around this. In fact, for those who said it's a range, luckily no one said a downtrend, but for those who said a range, you have a certain point maybe on a lower time frame in here, right? But if you look at this entire move, I would not consider that a range. This is a range, yes, within this downtrend, right? We don't have, I mean, this was maybe a triangle, partly as I said right in here, but we broke out of the triangle, small triangle. That's more like a 4-hour range a while ago. So the next resistance on this chart is where? We stopped at the 32 of the entire down move. Where could we stop? Where should we count on stopping the next resistance level if we continue in this uptrend? Now Adrian has already one answer. In fact, he mentioned a few minutes, 2 minutes ago, we're kind of forming a double top. And I think that's too early. Now I'm not saying that that's not possible, but I wouldn't think about it as yet. Basically, we're breaking as we speak, and it doesn't. I wouldn't think about double top as yet. We're making higher highs and higher lows on the daily chart. If you zoom in, you can see that every day has higher highs, higher lows. If this higher high doesn't break, if this daily high doesn't break for 2 days, then we have a daily fractal. And then we can start thinking about double top. Other than that, we're now currently, as we speak, actually moving up. Only if we would really not break the 2 days, that high, then we could start thinking about double top because then clearly we have a lack of power there. Most likely. So with that, if that's my opinion at least, if you're still doubting and still don't want to take that as an argument for considering that not double top, then you might want to take a look at yesterday's high. If we break above yesterday's high, then of course clearly we're not only pushing above the this top, but we're also pushing above the candle that pierced through that top. Well then, that would be the confirmation of that upside, right? But the thing is that if you look at the candles, if you're looking at an impulse, always look at the candles. And the candles will keep pushing up within that impulse until at one moment you don't break the high for at least 2 candles, preferably actually 5 to 6, and then you'll probably get a reversal. So with that said, what would be if you, let's assume this scenario, what would be the next resistance on this daily chart then? what will be the next, what will be the target of this breakout? You see those orange lines there are the triangle, in fact, and we're breaking out of that triangle. Well, Vikantas, I totally agree with you. Yes, it is. Yes, indeed, Adrian. Yes, if you think this way, indeed, then it's the 50 and the 272 target. All right. Indeed, at 97. That is the target of that breakout trade. All right. But in general, Adrian, though, take a look at time factor. Really, it will help you. It will help a lot. Any traders. If you look at this downside, for example, all these candles cut the low, keep cutting the low, keep cutting the low. Almost every candle. If they don't, then usually within 5 to 6. It's a pretty good guideline when to expect the finish of the impulse. So this is the 4-hour chart, and what we're looking at here is this, of course, this up move. Now it's very clear. And the 4-hour chart definitely, no doubt about it, higher highs, higher lows, upside, right? 1-hour chart broke out here, hooked back, continued, maybe making another hook back. Bounced off the 382 fib, which is very shallow. So let's see, it's kind of like a small consolidation period zone right in here. If it does break, we could have, we know that 97 is the bigger target, but we can have some upside here if we do break above this top, maybe small bull flag and continue to the minus 618 and something like that. Now personally, I'm not interested in trading it right here. As you know, it's right at the top. Either it moves down to a 50 fib or it hits that target, gives a hook back to, for example, the broken top, and then I would be also interested maybe, right? Those things would need to happen before I get interested in a trade. I don't sell right, or buy, sorry, right in front of support resistance. Alrighty, well that's the odd. Great job there, folks. Someone has a question on the euro dollar. I'll just answer your one last question, okay, if you don't mind, about a potential, let's see, buy at 135.20. Let me take a look. 135.20. That's right here. Stop loss 134.80. And take profit at 135.70. Let's see. So, well, everyone knows my opinion on that one already. Probably, because I'm in the short, I wouldn't advise to go long in that case. All right? So, no, it's just, these are, I rounded it up, Moses, that's why. These numbers are just rounded up. If you look here, you'll see 5 digits, that's why. Yeah, there is, I mean, there's a bit of a triangle here. To me, the day chart, yes, you have a point that it does have an impulse here, of course. And we are above a important support. Although, if you look at the most recent highs and lows, we are making lower lows, lower highs. So that's why I call it neutral, because we are above important support, but technically speaking, we are making lower lows, lower highs. So that's why I call it like a blue zone, a neutral zone. 4-hour chart is down, and personally, I don't know. I don't see that probability high enough for me to trade that. So that's my opinion. So let's move on to something else. Anyone have a preference? Maybe I'm looking for maybe a break above this line for the dollar CAD, for example. Could be a breakout. Dollar yen is a good one. Let's take a look at that indeed. Kiwi, we can do that after the dollar yen as well. Dollar Swishy, sure. Euro yen. Oh wow, there's a big list coming here. Let me start with the dollar yen if I can find it. I don't know where my dollar yen went. Must have deleted it by accident. There it is. I'm still looking for a, basically a break above this orange line. There are a lot of lines here. Let me take this off first and clean it up a bit. This orange line right here. Regarding the reason why is that it still is a very bullish count, although recently we stalled a bit here. We did respect the 98 level as expected. As I mentioned also in the wave analysis on the Admiral Market website. So to me, anything in here is definitely still potential turnaround area to move up. Right? Doesn't mean I necessarily want to buy it right here. For me, the trigger is probably this orange line, or if we were maybe close to this bottom again, those could be triggers to take a trade. I'm still bullish on this count though. Just based on the wave count, I expect at least one more upside, if not two, maybe up to 100. Let's see though. I mean, the invalidation level is 97.50. If we break below 97.50, then something else is going on. Oh, well, I can keep that green, in fact. Other than that, we could expect, in fact, a bounce at the 50 fib if we were to break below, because we bounced off the 382 here. If that isn't the turning spot, and we do move down here, then the 50 fib would provide support at 97.80. So for me, the areas of interest are close to this bottom, at the 50 fib, or upon the breakout to the upside. That's my take on the dollar yen. Let's take a look at the target. Let's see. Wait, sorry, I made a mistake here on the fib, I think. Let me count that quickly. One. Here, that's the, I don't know what I did. Somehow the fib got changed. Anyhow, that looks like the right fib. And the target would be, I would go for, well, 99.20 probably would be the first pause, 99.20. And we can see a bigger consolidation zone there probably. And then potentially the next up move up to 100, in fact, 99.80. Yeah, exactly, Janina. Yeah, something like that indeed. 99.20, 99.15. I mean, we could break above that, but that would be a potential resistance problem. So that would be the conservative target, definitely. Good job. Kiwi. I haven't looked at the Kiwi. In a while, when it was stuck in this range, in fact. Let me take a look again. Let's start with the daily chart. Well, there's a tremendous impulse here. I mean, that's without any doubt. Just look at every high. Every high gets broken here. Tremendous upside. So I lost a bit of attention, but in fact, a break of this high, because of this, if there's a really aggressive move, we know that the likelihood, and this is valid for almost all time frames, if it's a very aggressive move, the likelihood of a break is high. The same with the euro dollar, in fact. The downside was very aggressive yesterday, relatively. So that's why I think the break of that bottom is a decent probability. The same was for this Kiwi, where we had a very aggressive up move. And the break of that top is a decent probability. We're broken above this, so we're definitely breaking out. And we're in uptrend on the daily chart. We're in uptrend on the 4-hour chart. Look at these recent higher highs, higher lows. And you can even connect the bottoms and tops. We can have that channel like that. Now, the only thing is, of course, as you know, we have to be aware of resistance. We can be in an uptrend, we can be in a downtrend. That's all dandy and it's great. But that trend, of course, can stop if we bump into major resistance. And this top is a major resistance, right? It's something that currency could break through, but something that it definitely might pause at as well. Right? There's a good chance it could happen. Now we're about 11 pips away from there. Will it stop there? I don't know. You never know. But it doesn't make sense. It's a rule never to go long right in front of that. Right? Not if you have sufficient reward to risk. If you go upon a break here and your stop loss is small enough to have a balance about at least 1-to-1 here, if not 1.5-to-1, then okay, right? That makes sense. Otherwise, it's in fact nice channel. I didn't look at it in a while, as you know. This is the 50-minute world, and you can see it's a nice channel. This is the 30. Nice channel to the upside. Price is staying above the moving averages. But I can't trade it at the moment. Right? It's not tradable for me. I would advise for you to have the same thinking. But what we could look at, let's see, is if it does break above, basically, we could see maybe a continuation up today at 86 fib, for example. So what we're looking for, this is the 4-hour chart, is probably a break and a hook back, for example. Right, a break, hook back, and continue in this channel. Other than that, I really don't have much to add. Let's take a look at dollar Swissy. Euro dollar still bouncing about, I see. No direction as yet. Dollar Swissy is in fact a very nice uptrend channel. Take a look at that. Very nicely in harmony, right? The tops and bottoms are almost like perfect. Perfect touches both on the top and the bottom of that trend channel. I mean, this is like a textbook example, right? So that's very cool. I don't know exactly what that black trend line is. That's an old broken trend line. I don't know. I'll take it off. It could. It's such a long time ago. What we do want to be aware of. We have a still supply and demand. For those who remember, we were talking about supply and demand. This was still one of those. So if we do get there, we want to be aware of that. All right. We definitely want to be aware of that zone, which could be resistance. Get rid of this one. So that's basically how it looks like. We're in uptrend on a 4-hour, 1-hour chart, and as long as we stay above this channel, we can keep moving up. But we have to be aware of the resistance at the 50, for example, and this entire zone and the 618, where we could bump into a bigger headache, right? If there's upside. If we were to break this channel, then we can expect more downside here on the dollar in general, and the dollar Swiss specifically. We do have some divergence between these tops. So maybe we can make one more downside. We see already this motion of correction here. So it's potential to maybe fall down here and then bounce off the bottom of the trend channel. And we have to see how far the bounce will go. A bit difficult to say. A bounce here is likely, but will it bounce for a break or bounce for continue? That really depends on the higher time frame. That's not too clear in my opinion. It is a nice strip trend channel. The 382 could be a resistance spot. I think if you look at the weekly, a higher continuation is likely because we are at bigger support levels. So, you know, some upside to retest this top, I think looking at the weekly makes sense. But let's see. We can put a trend line like this for the moment. Maybe. It's still early to tell. This was a good trend line break, right, on the dollar Swiss right in here. And right in here. So the dollar Swiss either maybe a potential bounce in here, as I said, or if we were to break this trend line, although it's not a big consolidation period. If you look at this and compare it to this size and this size, it's still relatively small, isn't it? So preferably would like something like this to be built and then take the break of the trend line or the bounce off the bottom of the channel, one of the two. Yeah, definitely Modros. Very nice up move indeed. Absolutely. What else do we have left? The euro yen. Let's take a look at the daily. Kind of in a rising wedge. If you connect the tops and bottoms at least. Now the price is definitely above the moving averages still. So although we have divergence between these tops, right? There's definitely divergence, which could warn us that on this daily chart there could be maybe a potential retracement, a bigger retracement coming up. It's possible. I mean, there is a lot of divergence there. Plus a maybe a rising wedge or at least some correctional movement up. It's not as impulsive. Maybe triangles, Modelo says, it's not as impulsive as this part, right? At least that's without any doubt. We can agree with that. We can all agree on that. And so those are the things we can observe here for the daily chart. Otherwise, it is still making higher highs, higher lows, though. We can even take a look at the weekly quickly. Weekly, we can see still higher highs, higher lows, right? Price well above these moving averages. So definitely uptrend, but we do have signs that it's tiring, right? It's kind of getting a bit, the EJ is getting old and tired now at the moment, right? Doesn't have that upside power as it did. The 4-hour chart, we had a pretty choppy correction to the downside. Did bounce here, and that was a good break. So what do we have now? Well, because of that divergence, we can still put a fib here, and you can see we kind of, we didn't really, we broke through that 618, in fact. I don't know. That's really not that valid, in fact. You know, this is, we're in the middle. I call it in the middle of nowhere, maybe. Why is that so? Well, is this a hook back? Because of the divergence, is this a hook back to reverse lower? Or is this just a break, pull back, and continue? I think both are valid, in my opinion. So I think both sides have a point, and that's why I'm on the sidelines, in fact, because I don't see a clear-cut winner, let me say it this way, or direction I would like to trade it in at the moment. Janina says there's resistance on the weekly. It is, yeah, that's true. There's resistance. It's still a bit higher, though, isn't it? 138. If you're talking about these tops, 138.50-ish. Or if you're talking about the most recent top, of course that's definitely a resistance to 135, right? And if you look at the candles, this is the 1, 2, 3rd, 4th week, right? That we're below that. So either this, if we don't break it by this or next week, then according to my time factor rule of not breaking it within 5 candles, and you have a higher chance of retracement. So that could happen if we don't break this or next week, maybe the week after. So maybe November we could see that bigger retracement indeed if it doesn't break, right? As Mulder decides it's maybe asking for a retracement. What would be the target of that retracement? Well, the trigger for retracement like that obviously is this lower light green line. Let me make it a bit different color so it's clear what I'm talking about, this magenta line, right? If we break that magenta line, that could be one of those triggers, right, that we can expect more retracement. If you look at what the target could be of that, well, we could put a fib on this entire up move, in fact. And what would be the 382? Maybe even the 236, but the 382 especially, where is that? At around 120. Yeah, 119, 120, right? There's also big bottoms here. That could be the target. It's a long-term moving average as well. So that could be the target of that. And there could be a bounce, and who knows, maybe even continuation. That's, anyhow, very far from now. So 120 could be the target. But let's see. We still need to wait and see a bit. Right here, right now, yeah, it's with that much divergence. I do have to admit, I'm not the person that is actively seeking retracements, but I have to admit that these fibs, I really do think are resistances, are big resistances, just like the top. So any upside, I think, will encounter strong resistance, and I think there is a decent chance of making that retracement. We'll have to see, but now at the moment we kind of like pushed up a bit above the 618, moved down from here, making lower lows, lower highs on the 4-hour chart, in fact. So maybe there's a potential to make some correction back to the bottom of the trend channel, which I'm sure will give some bounce, right? And then we'll have to see. But I'm not all too, I don't know, not all too big of a fan of it right now. Although if you look at the 1-hour chart, you do have lower lows, lower highs. We do have even maybe 5 waves here. How does the 15 look like? Could even be ABC, maybe already finished. Maybe price is respecting these moving averages here, and maybe we're continuing down. I don't know. That's possible. Let's take a look. We do have lower lows, lower highs, as I said. We are at the long-term moving average here. Well, as you can see, I'm doubting with this one. It's not a real clear, I don't really have a clear, I mean, the long term is more clear for me, what I'm looking for, I think, than this short term. I mean, we still could maybe move down to the bottom of that channel. Maybe that's the best option, but let's see. There are no clear trend lines that I can keep an eye on as well. Maybe a break above here. Maybe a break below. We're actually breaking maybe below this as we speak already. We had, let's put fibs on this downside. We had a 50 here, went to minus 1618. $382 here, went to the minus 272 target. Yeah, maybe that would be a way of checking out this euro yen by keeping these two lines on. If we do break above, maybe we can move up to the 786. If we do break below, maybe we can move down to the minus 272. Something like that could make sense. Alrighty. Well, let's take a look at the euro and see how it's doing, what is happening. It closed bullish, in fact. A bit bullish, yes. So, yeah, price is finding that support a bit, at least on this green line. Let's see how it continues. As I said, this 135.35 is a 4-hour resistance spot. So any stop loss above there is, I think, the best spot, because then you have it at a spot that if it breaks that level, then obviously the downside is in fact a lot choppier or weaker than I'm planning on it, at least. Let me say it this way. So that would be the optimal time to get up. That's always the best stop loss place, because you want to get out where you feel confident that the idea of the trade is invalidated. If you put it somewhere where you put a stop loss, but your trade idea is still valid, and it turns a bit lower or higher, and you think, oh, I was right, but I just put the stop loss there. Lau is asking if the euro dollar is affected by the GP news. Well, you will see some movement, of course, but as far as I know, I mean, not that I've really consciously tested this, but if the pound moves, the euro can stand quite still. If it's really then really the pound is traded. But I'm not an expert on this. When is the news, in fact? 25 minutes from now? It will definitely have not, I mean, for sure it will not have the same volatility as the pound. There could be a bit more volatility, but what is it? Claim and count change, 24 minutes from now. The safest stop loss is in fact here for this trade idea, by the way. I should mention that because of the fact that that is the 4-hour, that's the real top, right? The top of this swing high, swing low. And these fibs could actually still turn the whole thing down, right? But that's exposing to a bigger stop loss all the way at 135.75, which would have been a roughly 55 tip stop loss, 55 pip. And that's something that didn't really interest me. That configuration targeting 134.60, only giving really a 1-to-1, and well, wasn't worth it in my opinion. So I used the tighter, in a way, the medium tight stop loss. Yeah, it's struggling, which surprises me, but that's part of trading. Could be a bit of quietness, before that news event. The market could break a bit free after that. Yeah, it's waiting for the debt approval indeed. Indeed. Well, folks, let's see how this goes. Other than that, let's see, did we miss anything? We talked about the Swiss C, EJ. Did I have anything on my list? I actually have odd yen here on my list.